I'm introducing Jonathan tonight that we start the presentation. Jonathan is the CEO of QED-it and also a friend for the 20 last years. So Jonathan, please.
Thank you. Hi. I think it's the first time I get claps when I go on stage. That's really embarrassing, guys. I feel like I need to be in a stand-up now. I'm really happy to invite all of you to QED-it's launch. We're gonna have a presentation about what is QED-it, how this company came to be, what we're trying to solve, and then talk about the product itself. And then we're gonna have a little bit of time dedicated to how can you be part of what's going on here. The subtext of this talk, the main message that we're trying to convey is this year, 2019, you're gonna hear about zero-knowledge proof a lot, and specifically you're gonna hear about QED-it much more. Up until now, we were building our thing and talking mostly in the industry with large clients, talking to investors, to blockchain stacks, talking with a lot of researchers in the field, building standardization effort that I will talk about. Now, this year, I cannot make all the announcement that I would like to make because it's still a bit early, but there's much growth in the company, and which means that we're now expanding our what we do and the teams, etc. So I'm gonna explain a little bit what we're doing. Maybe just as a small background, the co-founders have a history in the blockchain space. So maybe some of you know Bits of Gold, the exchange in Israel for Bitcoin and Ethereum. This is our first company in the space. And then the second one was a company that was doing security in cryptocurrency that was sold to Digital Asset Holding. Digital Asset Holding is this large company that's now deploying blockchain in the Australian Stock Exchange. So this experience of basically being in Wall Street and seeing how bankers are looking at blockchain made us realize that there's something that's missing in this space, and this is what QED-it is fulfilling. There's a problem of privacy in enterprise blockchain. So you're familiar with the fact that when you're sending a Bitcoin or a cryptocurrency from your wallet, even a token, you know, all those ICOs, you can go online and see who got what tokens and analyze exactly what that token did. There is no privacy on blockchains. Blockchains are transparency machines. It's great to generate a consensus between participants, and this is why the banks are really interested in this field. They want to have a consensus between the banks without a central bank that makes this collaboration. It's interesting for more industries, but it's at the price of privacy. You're revealing to all the parties all your confidential information. And there's a very cool piece of technology that happens to be the solution to that problem. And us as a team knew about the existence of this technology and the fact that it's maturing now. So we built QED-it to solve the problem of privacy on blockchain. So I'm gonna talk a little bit about that. So the problem itself is basically two conflicting trends. You have your private data, right, on Facebook, on whatever application you use. There's the same in enterprise, so in your bank. There's more and more private data that's being accumulated in the enterprise world, and you need to protect this data. There's a trend towards privacy, protecting private data. You no longer look at emails as just this thing that you can reveal to everyone. You look at it almost like a credit card number. This is GDPR, you know, the regulations in Europe. So private data is being accumulated, and you need to protect it. There's more and more of it. But at the same time, you have this trend about blockchain, which is Let's collaborate between participants, between competitors. Let's create a network and collaborate between us. And that collaboration, it cannot happen at the price of privacy. So you have a need for more privacy, but a push for more collaboration. And this tension is exactly what we're solving. We saw this tension. We immediately got, as we created this company in 2016, we immediately got on the ground and looked for the use cases where you have private data and companies that want to use this private data, but that they cannot share it. It's not legitimate to share it. So to give you one example, you have, for example, BNP Paribas. We did a sort of proof of concept with BNP on proving when a trader is entering, wants to be financed a trade, they go to the bank, they say, I have some, let's say, beans of coffee in this warehouse. Please finance and use these beans as a collateral. Some malicious traders take the same beans and go to a second bank and say, please finance me with this collateral. So they point to the same collateral and they get several financing from several different sources. It's a fraud. But the banks cannot detect this fraud because they cannot collaborate between them and send the information on their clients. So the banks would like to fight the fraud of trade financing, but they don't have a mechanism to do so. They would like to apply a blockchain, but they cannot put on this blockchain the data of all their trades. This is an example of a place where there's private data. You would want to collaborate on the basis of the private data, but you cannot share it. Another example, a bit more extreme, Thales. So we were in a Thales accelerator working on, so Thales is a defense company. This is a POC that we did, proving that a jet fighter can still continue to fly. So Thales is selling equipment that goes on jet fighters, proving that the jet fighter can continue to fly and that the operational status of the aircraft is okay, without having access to all the recorded data on the plane, because that data is defense. So think about an army using an aircraft. Up until now, every 6 months, they need to take this aircraft, put it on the ground, even if it's good to fly. But there's no way to do predictive maintenance on this aircraft because the data is private. So Thales cannot run their calculation on the data. So what we do is we take this calculation that Thales wants to run on the data on their equipment, on the private data that's defense at the army, and get the result of this calculation, if it's red, yellow, or green. If it's green, the aircraft can continue to fly. You don't need to replace this jet fighter with another one. So this saves a lot of money for armies that are deploying this. These are all examples of use cases where you have data on one side and it's not legitimate for the other party to read the data, but they still rely on that data. Now, so we were on the ground looking for these use cases, and the solution for that is something called a zero-knowledge blockchain. So it's the combination of enterprise blockchain and zero-knowledge proof. Zero-knowledge proof is this cryptography that has become practical just in the past 5 to 10 years. It was deployed first with a cryptocurrency called Zcash, and it became possible to start proving things on data without having to reveal the underlying data. It was theoretical for many years, and now it became practical. So to give a glimpse, an example of what is zero-knowledge proof, how it works, first of all, how many of you, because I know that some of you have read a bit about zero-knowledge in preparation for the, how many of you know about zero-knowledge proof, like basic functionality? This is awesome. This is the highest that I've ever got. So that's the reason for the claps, I guess. Thanks. Okay, so this is how we tell it to bankers, okay? So imagine a banker listening to this story. So there's this book, you know, Where's Waldo? Where you need to look for Waldo. This is a brute force problem. You need to scan the page and find Waldo on the page. As a child, you get a lot of joy when you find it. But there was, unfortunately, this kind of prankster here in Tel Aviv that was going to children's libraries and was putting specially crafted books that didn't contain Waldo inside. He went all through the pain of creating a Waldo that doesn't, Waldo book with no Waldo in the book. So the kids, when they would receive Waldo, they look for it at home and they can't find it and they get extremely distressed. They cry for hours and they need shrinks and it's a calamity. So he's a psychopath, right? So how can librarians now prove to children coming to their place that this book that they're about to buy from the shelf is a legitimate book, that it's not, they're not going to end up like their friend? So they cannot point to Waldo on the page because that ruins the fun of looking for Waldo. So how do they prove to them that Waldo is on this page? They need to create a zero knowledge proof, a proof without revealing the knowledge. So what they do is the librarian takes a large envelope, 4 times the size of the book. He creates a small hole in the middle of this envelope and places the open book inside, and since the librarian knows where Waldo is, he places Waldo right under this hole. So the child now sees that Waldo is on the page, but then the librarian shakes this envelope and hands it back to the child. So the child still has the fun of looking for Waldo. They don't know the X, Y of the solution, but they know they had a proof that there is a solution. And this is exactly a zero knowledge proof protocol. You have putting in an envelope, showing without context the solution, and shaking so you can't go back to the private data. This is all steps that their equivalent exists in mathematics. So you have private data that solves a set of constraints. You don't share the private data, but you demonstrate that it solves the constraints, but you shake it in a way that you can't get back to the private data. There's the equivalent in a zero knowledge proof protocol. To give a concrete example, if we're in a bank and we want to prove that we have an asset, we're going to use our private data. That's all our previous transactions where we assemble those assets. And we're going to prove to the party that we're sending the asset that, yes, the sum of our assets is enough to send you this asset. But that recipient is not going to learn who we got it from. So this protocol was, zero knowledge proof was co-invented by Professor Shafi Goldwasser. In this company, we have concentration of people from this space of zero knowledge proof that created essentially this field. So Shafi got a Turing Award for inventing zero knowledge. So this Turing was in 2012, but the invention was already back in '89. She's a mentor to QED-it in our scientific advisory board. And then Professor Eran Tromer is one of those signed on ZK-SNARK, which is the implementation of zero knowledge proof that started to demonstrate how practical this is. So he's an advisor to the company, but we don't just work, on an academic level. We pack a punch of millions of dollars. So I can't talk about numbers, but double-digit numbers with VCs and investors from Israel, China, US, Europe that help us bring this to the market. So what we're doing is bringing zero knowledge proof for enterprise and deploying it in enterprise context. Any questions so far? Or?
Yeah. Suppose I'm a smart kid. How I can have the proof that the example of Waldo, the example picture of it, is from the same book that I want to buy?
So the question was challenging my zero knowledge proof of the Waldo example. Again, a first. I like it. I would say this: the child picked the book, saw with his eyes that the librarian was putting it in an envelope in front of his eyes, realizing that there's Waldo on the page because he's peeking outside of the hole, and then receiving an envelope, the same envelope with the book inside, open, but they cannot figure out where is Waldo because the envelope is 4 times the size of the book. After the shaking, they cannot understand where exactly Waldo was. So it's the exact same book that they then take home, and they know that Waldo is on the page. Does that answer?
Yes, but not it's from the example that there is a actually book, but if I a company and I'm in the librarian job, I can smartly pick in 10 million seconds or something like that another book.
Okay, so if I understand correctly, the example is okay, but if you move it to the enterprise world, if I want to take data and use this data to prove something, how do you know that I'm not using other data to prove it? So the Waldo book is fine, but it's just that in enterprise context, when you move it there, it's a bit shaky. It doesn't. Okay, you're correct, and half of the proof in an enterprise context is proving that the data is valid, that the data was correctly hashed to the blockchain beforehand. So you do a hash of the data. I won't go into details. Please come to me afterwards. Thanks. So the executive team of the company, the people that have started building this company. So 3 co-founders, Ruben, who was here on stage, that has the works in Paris. There's a Paris office as well. So 10 years at McKinsey. We're friends from 1999 from the Technion. And he was also introducing me when I got married. he's a very, very, very close friend. And Aviv Zohar, we know from the Bits of Gold times. He's one of those prominent professors that started working on Bitcoin very early on. He found a flaw in the Bitcoin protocol, and based on that flaw, invented direct acyclic graph-based consensus mechanisms. So that's at the heart of DAGLab and other protocols. And also, it's the only scientific paper that's cited in Ethereum. So Professor Zohar. And then Shiri and Ori, who are helping us making this into a business that delivers to clients and not just staying in the lab. The very first person to join the company was Kobi Gurkan. Kobi was actually our VP R&D. Kobi was actually doing zero-knowledge proofs as a hobby before we met him. Applied cryptographer that did many years in cryptography. Ask him what pushed him to do zero-knowledge proof just like that when you catch him. So Ori, by the way, is going to present the product itself in a moment. So I'd like to just focus on one more thing that we've been doing. So I talked about Professor Shafi Goldwasser. With her help, we standardized this entire field of zero-knowledge proofs. We created something called zkproof.org, which is an effort to standardize this field with other partners, so IBM, VMware, Microsoft, the big blockchain stacks, Zcash. And with their help, we're looking at the security of zero-knowledge proofs, on how to create tools that everybody can use, interoperable tools, so each company goes in a different direction, and how to apply them to blockchain, to transfer assets, to prove things about your identity. So this is a picture from MIT, the first workshop. The next workshop is going to be in Berkeley in April this year. So we're gearing up. There's proposals. It's twice the size. This is 70 people. Next one is at least 150 apparently. So that's where the entire industry is focusing their efforts on agreeing on what's the zero-knowledge proof standard. And behind the scenes and on the scene, QED-it is pushing so that this can be a reality, helping bring the bring what we see as a need in the enterprise world to this effort, and receiving from this effort sort of stamp that what are the technologies that are useful today, and doing benchmarks between the different zero-knowledge proofs. There's a lot of activity in zero-knowledge proof lately, lots of new schemes, and there needs to be a place to compare them. This is the place. So actually you can find a bunch of us in this picture. Yeah, I'm somewhere. There's also this guy who's here. His name is Jonathan. He's the same age as me. You can find him in the room as well. So just from a high-level perspective, what is this product? We make it possible to generate proofs. Instead of sending the data to everyone, you send proofs about the data. So the data stays in the enterprise system. It goes to the prover, and the prover generates a proof that goes on the blockchain. The blockchain is, as blockchain should be shared between all the participants. So a participant that wants to verify the proof can see that the proof is valid, but they don't have access to the underlying private data. They only see the proof, and they can verify that the proof is valid. So instead of a blockchain of data, you get a blockchain of proofs. This is, in our understanding, the only GDPR or regulatory compliant way of having a blockchain at all, because the alternative is sharing the data with competitors, and that data should remain protected. So I'm not going to go into specifics, although if you want specifics, please go ask us afterwards. It's an enterprise solution. The core of what we do is making sure that it scales well, so you can get more transactions per second. Ori is going to talk about it in presenting the product. And that's actually it. So Ori will present now the product. So Ori joined us a few months ago. He was previously at McGraw-Hill dealing with their transition to digital and to cloud, having millions of users online. So McGraw-Hill is more known for the education part, but actually they have live systems serving universities, and you know that it's mission critical when you're a student and you need to have your material online. So Ori, please come and present our product.
Can you tell about the story of recruiting Ori?
Oh, how did we recruit Ori? So we had Emily posting a work description, a job description, and we had 200 applicants, very, very interesting applicants. But one of them sent me a LinkedIn message saying, "Hi. So I heard that you guys are recruiting. I don't know how much you want to pay for your VP product, but I know how much I want to get. So here's a link to see if our needs match in zero knowledge." So he sent us this link. I go in. I type what I thought was a highball number. And then he goes, the answer was like, okay, so I'm exponentiating. He really did like a zero knowledge proof thing. And then at the end, yeah, so maybe we don't match, but let's talk about it over coffee. So he was one of those finalists, and then eventually our first choice for VP product. So, Chloe.
Hi, everyone. Glad I sent that link. That was good. So what I would like to talk to you about today is trade and transferring of ownership. If you look at the history of mankind, it's intertwined with the evolution of trade. People have always been looking for new ways, more efficient ways to trade, to transfer things across the globe, whether it's silk or spices or gold, financial assets. And that evolution of things, it's happening, if you look at history, it's all happening all over the place. The latest thing is the blockchain. And the financial sector in particular has been looking at the blockchain for several years now and recognizing the tremendous potential that it has. All these big banks, Goldman Sachs, JP Morgan, they've issued these research papers talking about tens of billions of dollars in savings yearly by adopting the blockchain. So they're seeing these new opportunities to trade across borders, across organizations. And in fact, they've been investing heavily on this. They've invested $1.7 billion to date in experimentation. This is not VC money. This is trying to make this work to trade between them. And they're working on it now. They're investing in it quite a lot. And one of the last missing pieces in the puzzle is privacy, is trying to solve the privacy problem. So John mentioned this before. I want to elaborate a little bit. Some of you may be very familiar with it, but some may not, so I'll go over it quickly. The blockchain, in essence, at the core, is a public ledger. And it's shared amongst all the participants in the blockchain. It's transparent to everyone. So when Bank A is transferring assets to Bank B, all the other banks see exactly what happened. They know that Bank A transferred these assets to Bank B at this date. And when you think about an enterprise scenario, banks trading between themselves, maybe insurance companies, that's sensitive information. That knowing how much business I do and with whom, that's sensitive information. That gives my competitors an edge over me, and it's vice versa. I know all my competitors. So this is a problem. And they're trying to solve this problem in order to make that promise of more efficient, transparent trades, consensus, and so on the blockchain. They're trying to solve that in order to get the benefits of the blockchain. And there have been all sorts of directions taken. One of the leading directions right now, the one there's an emerging consensus around as far as the leading way to do this is zero-knowledge proof. John mentioned an example of zero-knowledge proof. So how do you do that when you transact? How do you, instead of sharing the data, how do you prove that? Well, you do that by proving all sorts of things about the transaction itself. You prove, for example, that I am indeed the owner of the asset. And you prove that I didn't spend it before. I didn't sell it to someone else before. You prove that the amount was preserved during the transaction. If I have 100, you get 100. And I didn't create assets out of thin air. And all sorts of stuff like that. It's about 10 different things that you need to prove. And then you publish that proof to the blockchain. Everyone sees that proof. They verify the proof, and they can be certain. It's a mathematical cryptographic construct. They can be certain that the transaction is valid and that the total system integrity is preserved. But what they don't know is who's the buyer, who's the seller, and what they're selling. The amount, what they're selling, they don't know any of that. And still, they can be certain that this is a valid transaction. So that sounds like magic. When I first saw it, it was magic. That's why I sent that project to John, because when I read about zero-knowledge proofs, I was fascinated. That sounds like magic. I need to read more about this. And I tried to actually do it, to prove myself that this is possible. But doing it is actually very hard. I worked on it a lot, and I did a very simple, small piece. If you want to actually prove things like valid transactions, that's challenging. That takes cryptographic expertise, and making that mainstream is kind of hard. And that's where we step in. What we provide is an enterprise solution that allows you to issue and transfer ownership of assets privately on the blockchain. And we're using zero-knowledge proof to do that. And it's an enterprise solution. You saw the diagram before. You can deploy it on-premise. You can deploy it on the cloud. We support both. And then you have this privacy layer where instead of just sending all the details of the transaction to the blockchain, you instead tell it to generate a proof. What you do is transfer the asset, but what's happening behind the scenes is generation of a proof, and then broadcasting that proof to everyone, and reaching consensus through verification of the proof, rather than seeing the details. Now, what we pride ourselves in doing is taking that theoretical and now also the technology, the practical technology, and focusing on what is needed for the enterprise use case, for banks, insurance companies, credit card companies. And I want to give you a taste of two things that we do to facilitate that. So one of the things is scalability. When you're trying to generate a proof, that's actually a very resource-intensive process. And what QED-it developed is a patent-pending technology that allows you to take that one big proof, break it down to smaller proofs, and run them all in parallel. So if you have a big field, instead of harvesting it with one machine, several machines do the job faster. So we're taking that and breaking into smaller proofs, running in parallel to reach the scalability that you need, the throughput, and to reach the latency, to lower the latency to support your use case. Here's another example. So asset issuance, that's a big deal when you're talking about blockchain, but not only blockchain. I mean, I can't issue shekels or dollars. If I do that, I will go to jail. So governance of who is allowed to issue assets is a big deal. And so first of all is that issuance and a mechanism to make updates to that in a way that is transparent and is clear to everyone. But not only that, some assets you issue in public, some assets you issue in private. I'll give you an example. If I want to issue tokens that represent stocks, well, that's usually done in public. You know who's issuing the stocks, you know which company you buy stocks of, and you know how many are in total in circulation. So the issuance is done in public. That's one use case. Other use cases may be private. I can issue these assets, but others wouldn't know. So I don't know how many loans Bank of America gave last year. They have that asset. I don't know how many, and that's fine. That's acceptable for everyone. So we support that. We support both public issuance, private issuance. You can have fungible and non-fungible assets. So maybe a fungible, non-fungible token representing a house, a fungible token representing currency, maybe dollars. So we support both of this. And this is a short example of a code. This is we offer several SDKs, native client SDKs, to interact with that system that you saw, the diagram that you saw before. This example is in Go. We're big fans of Go. So we have Go. We have a Go SDK. We have other SDKs as well. And what I want to show you is how simple it is to use. You create a request saying which wallet you want to transfer out of, the recipient address, which asset, the amount, and then sending off the request, posting that request. And that finishes the transaction. Now what happens behind the scene is very complex. Now there's all these machines that we saw before running around and creating proofs, hashes, commitments, signatures, running in parallel, gluing it at the end, all complex stuff, deep cryptography that the geniuses that are here in the audience and working in QED-it They all do and understand. I don't. I just know what it does. I don't know how it works. And what's beautiful is all of this is beautifully abstracted by a single line of code. So when you have the developers in your team trying to build a solution on top of blockchain, they're not trying to do blockchain for fun. They're trying to solve a problem. So you have this development team. They do this. They work on their business logic, their system, their development. They don't need to care about all the complex cryptography behind the scenes. This makes it simple. This accelerates development, accelerates rollout to production. So hopefully, if I did my job, I piqued your interest and you want to learn more. So I want to direct you to the website where we have much more. We have a white paper, and we have data sheet that explains about the product. You can see the API. There's a GitHub repo that you can clone and work with, a sample app, developer guide. So please do visit that. And if you have any more questions, catch me afterwards or any other of the QED-it team members. Thank you.
If you have questions, this is the Q&A part, so kind of a live Ask Me Anything. On any topic, the things that I can talk about and answer on a stage, I will. The things that I can't, or if I can't because it's too deep technologically, we'll move to the side. Hi, what's your name?
Ida.
Ida.
So, very general question, but why QED-it and not Monero, Zcash, Starkware?
The question was, why QED-it and not competitor A, competitor B, competitor C? No, he said Zcash, Monero, and Starkware, right? So actually, we other than Monero, we have very good relationship with both Starkware and Zcash. Zcash were actually publishing, I think, in a week, an audit that we did on the Zcash code before they launched Sapling. So they came to QED-it to ask for an audit on the code, and we collaborate on the code base at zkproof.org, and we also share advisors with Zcash. So very close ties to Zcash. You could say competitors in the sense that, well, they do zero knowledge, we do zero knowledge, but we see it more as widening the field.
It's more than that, you're actually implementing the same technology, right?
You're asking if we're implementing the same technology. So not exactly. Well, what we're doing is bringing this technology to enterprise companies and enterprise blockchain. So the needs there are a little bit different. When you do a cryptocurrency, you're very worried of what it means for random people to go into the ecosystem, go out. There's mining. The question of issuance of tokens is very important. You have all this part about the token value itself. Zcash is like has in a way done its IPO, right? You can know what the value of the Zcash ecosystem is by looking at the cap of that cryptocurrency. Starkware is a little bit different. They didn't issue a token, but they're very closely tied to Ethereum, and they're going on an angle of, from what we understand, of scaling Ethereum using technologies that were developed by Eli Ben Sasson and his team. Very bright team. Heads down to what they did. They also he's one of the main creators of ZK Snark. So they're pushing the boundaries of what can be done in zero knowledge proof. And all of these, we collaborate in the standardization effort. So in terms of products, we have a different focus. We're different. But in terms of wanting to see this technology deployed and solving real world applications, we're working on this together. Thanks. Was that super political? Right? Yeah, thanks. That's what I can say on stage. Okay.
Do you see banks really cooperating with each other, competitor banks cooperating on a blockchain, or cellular companies cooperating on the same blockchain, even with zero cash, forgetting all their differences and competition? And,
So if the question is if theoretically we could imagine such a world, well, in practice, there were launches of blockchain networks that are already connecting banks together, competing banks, in exactly those places where it makes sense. For example, there is a network, I think, by JP Morgan Chase called IIN, which helps the banks verify that the money that they sent through SWIFT, the details of the people, the sender and receiver, are correct, and there's no mismatch in the details. So it's a way to collaborate on data to help remove problems from international settlement. And this is already deployed in production. This is pretty new. It serves the bank's purpose to do that. So they're putting a lot of effort. Are they going about it, kumbaya? I don't know, but they do. In SWIFT they already collaborate. SWIFT is also a banking thing, owned by banks, and R3, you would argue, is also just many banks grouped together and working on enterprise blockchain.
Generate your own sort of blockchain.
That's the ICO question. Go ahead.
Generate your own blockchain infrastructure, or even just provide services for other entities like corporates to work on third-party blockchain such as Waldo or any private, or public.
I'll repeat the question. Do you have your own blockchain version or fork, or do you build your own blockchain, or do you combine with other blockchain offerings to offer this service? And the answer is the latter. So this is a solution that runs next to your blockchain node, uses that node to send the proofs to all the other parties, and we don't really care what is the underlying blockchain technology there. Actually, we're adding this for blockchain as a service of many different companies. It was, I think, already announced that this solution is going to be part of VMware's solution. So I can't say more. It's a kind of a teaser, but this is already part of the blockchain offering of VMware and their underlying stack. We're compatible with more blockchain stacks. You can't do two. Just
in a way, with the example that you gave with the military aspect, you actually don't even need a blockchain, just like a service for two parties interacting with each other.
That's true. So some applications that we look at, we don't really need a blockchain. We need a mechanism to remove the possibility of changing the data, so an immutability mechanism. There's an announcement now by Amazon on something called Quantum Ledger DB, QLDB. This is a way to get immutability, but not the distributed part. And we are compatible with that form as well. So the core of the system can run connected to more than just blockchain networks. The people that come to us usually come with a wish to have a network of competitors running and no central point of connection. So it's a peer-to-peer network, but it's also compatible with more centralized systems.
So what do you see as the main challenges or hurdles for zero-knowledge proofs in the coming years? And like in general as a space, and specifically for QED-it?
Okay. So the main challenge, like the thing that's not on the slides but that occupies our minds as engineers, is the scaling of it. Zero-knowledge proof requires a lot of resources, and right now we're focusing on those use cases where you don't need thousands of transactions per second. So places where the value of the asset is, or the asset don't move quite so often. And going forward, you're going to see this deployed in more and more contexts where the throughput or the number of transactions per second of per bank is higher. So that's one. It's scaling the underlying technology. And then the second one is what we're proving now, the questions that you can ask on the data. We've done the first, we're covering the first use case that we see, but we want to provide tools for a sort of language so that you can run your own business logic and code the zero-knowledge proof yourself as a client of QED-it. So today, you have your interface is issue an asset, move an asset. But we already have in our, let's say, labs, a way of proving more than just the asset transfer and proving complex business logic on each transaction. And this is where this industry is going. It's more flexibility even on rules that you're proving. It's part of the vision of what's being developed. It contradicts in terms of the resources that a young company can put in this, and again the available talent to actually work on these topics. We just as a side note, we recruit worldwide. So we work with people in Berlin, in London, in New York. There's not such a great number of people capable of building this.
Two questions, please. First one, which technologies, blockchain technologies, did you run the POCs that you mentioned earlier in your presentation? Like Ethereum, Bitcoin, Corda, whatsoever. The second question, what's your business model?
I'll answer the second question first. So the proprietary part of what we do, we license. So when you're deploying a network, next to each node, you're going to put a QED-it solution, and that's you have a yearly payment to have that running at your network. But the more detailed version of this answer is the first clients are happening in 2019. So what you saw before the POCs, those are POCs that helped us go quickly to the market and build our offering mostly with innovation departments. Now this product is ready to be deployed with large banks and large companies that are looking at it for production. That's the second one. The first one is Ethereum. So for POCs, we used Ethereum. There was the one with Paribas was, I don't think I'm allowed to talk about it. Sorry. But you can understand from what I said before.
Here.
Oh, hi.
Hello.
You want to talk about privacy?
Sort of. I have a question about the utility of proofs in general as a way of owning data. So, like, I think the main use case of those kind of things is that, I mean, what's the usage? Like, in most of the times, the usage of zero knowledge proof in those cases will be to train an algorithm without having the data. The question is, with those proofs, is it possible to also train AI algorithms, or what exactly you can do with those proofs?
If I understand, it's a connection to big data, machine learning, where there's a problem where you have a lot of data that you want to train on, but some of this data is private. So ideally, you would like to train on private data, but it's very difficult to do. And can zero knowledge be an answer to that? I would say, first of all, it's an advanced topic, so I'll be happy to cover it later. But just the head of it, when you're doing a proof, there's a stakeholder that looks at the result, and there's quite a chance that the person doing the proof, if they didn't do the proof, they would be cheating. So let's say if I'm proving my credit score and you're going to lend me some, or like give me some credit, I have an incentive to tell you, yeah, my score is very high, so you'll give me the money. But maybe I'm cheating. So if I'm proving to you this fact, then I cannot cheat anymore. But when you're in the context of there's private data and you're training on this data, I don't know, for the greater good, you know, like fighting cancer. Why would somebody sharing doing this training on their private data, what's their incentive to cheat the recipient of the result? Are they so evil that they would fake their data for the result? If there is such a risk, if there is, for example, in the Thales example, if the armies that they're working with want to extend the warranty beyond what's really is okay, so the army would maybe modify a bit of the data and try to prove to Thales that it's their fault that the aircraft is broken. So there you need zero knowledge proof to see that everything's fine and that the calculation was correct, and there's no full trust between the parties. The extended answer, I'm happy to discuss.
Hey, so the question is about mining. Who's really going to do the mining for those systems? What is their motivation?
So mining is an orthogonal part of our system. Mining is in that space where we're creating proofs and then putting those proofs in the blockchain. Somebody needs to create a block and take that proof and make it truth, make it reality, for generate the consensus. If it's on a private blockchain, usually there's no mining involved. It's just the actors in the network have an interest to have this system running, so they're using much less advanced system of consensus. So it's not a Satoshi consensus, it's other types of consensus mechanisms. So no mining involved in most of our use cases. We did do a use case with Deloitte on proving your taxes, and we presented it at the ZCon 0 conference with the Zcash people on public Ethereum. So there you prove that your tax bracket is high or low depending on your private data, and that proof was publicly verified on a public Ethereum network by just random miners.
So in that case, let's talk about the trust mechanism.
Are you a maximalist?
No.
Oh, okay.
I'm just wondering. So what happened with trust issues if you cannot trust, like if you doing your own mining and validating your own proofs? What really stops you from being cheated or doing like malicious?
Okay. For the joke, maximalist is so we all come from the cryptocurrency background. Our first endeavors and companies were with Bitcoin, Ethereum, and there's a lot of heat there about what is really decentralized, what is less decentralized. And actually, Enterprise blockchain, you could see it as a not decentralized. Most people don't even like to call it a blockchain at all. And if I understand correctly, the question here is, how can you trust the result of this system if the system is not really decentralized?
One more thing for that, because on private blockchain you don't have trust issues, but when you're adding zero knowledge proof, is just because you have a trust issue and you don't want to share the information, or maybe you don't trust the resources.
I'll address this specifically. It's if I'm a bank and I have private data of my clients, and there's another bank, a competitor. Let's say there's 5 competing banks, and we want to handle an asset, like create let's say a bond, and see and follow the ownership of this bond from one client of one bank to a client of another bank, etc. The fact that the banks are running the nodes doesn't mean that you trust that you want to reveal to all the other participants who owns the bond. And also, it doesn't mean that you're now going to accept a declaration from another bank that they have lots of bonds. You still need this accounting system, and you still need it with privacy. So the fact that it's a private network doesn't mean that you're now going to trust the data circulating on the network without cryptographic proof. It didn't remove that. The fact you can take other trade-offs when you're in a private blockchain, but those trade-offs of trust, you don't have them. And again, I can dive deeper into that. Like, we can really geek out on that.
Actually, one can argue that actually in a private network there's less trust, because you are in a very it's a very concentrated sector-based blockchain, where, let's say, financials, insurance. So these are usually it's a highly regulated environment where people don't trust each other in the first place. So the fact that somebody got access to a permission to a private network doesn't mean that you're going to trust automatically any proof that they have or any.
I'm putting a cap to this talk. I want to be part of it, so I'm putting a cap on this talk.
Guy, if you start both questioning and answering, you have question?
No.
I don't know if that's relevant, but you said that you're aiming to banks and enterprises in general, and wouldn't they mind trusted setup issues?
Oh, good. So the background for the question is it's a known fact that when you're deploying a zero-knowledge proof circuit, or in a way the question that you're running on the data, every time you want to have a new circuit, you need to do something called, with ZK Snark, you need to do something called a trusted setup. Trusted setup is this ceremony where people create randomness, associate this randomness together, and then forget this randomness. So the question is, are you affected by the problem of trusted setup for libsnark and ZK Snark? The answer to that is, actually, when you're deploying a version in an enterprise context, you have other mechanisms that force you to do a sort of multi-party protocol. You need to make sure that all the banks upgrade it to the right version. There's other things that go in place that mean that you, in any case, need to have the others involved. And this is even more relaxed than that, because those banks can trust QED-it plus themselves, or QED-it plus themselves plus one competitor, and it's enough to generate the required trust to completely brush away any problem with trusted setup. But there's actually other new mechanisms that are beginning to show they don't have trusted setup. As soon as those mechanisms are go through ZK proof and have like a stamp of this is secure and this is useful and it works, it can work in a production environment, etc. We might have a use for those as well.
Yeah. So I missed
lots
the first
of Qs.
part.
That's good.
What?
Lots of Q&As. That's good.
Oh, of course. So I missed the first part, so maybe I'm asking something that other people already know. But as far as I understand, you're using ZK snarks to do confidential assets on private blockchains, right?
Yep.
So have you considered alternative ways in response to the scalability conundrum you said before? Have you considered ways to do confidential asset transfers and issuance with more efficient cryptographic primitives, let's call it like that, and then use the ZK snarks for what they're good at, which is more advanced types of transactions like loans or whatever?
Yeah, so actually the version that we're deploying here was the core of it is no longer uses libsnark but Bellman, which is at the heart of Sapling, if you know this new version. It's cryptography by Jens Groth 16, which combines part of what you're describing, the linear way of doing asset transfer is already baked into that protocol. So Pedersen commitments and ways to do faster proofs of nullifications and stuff like that. And now I said all the like that's the cap of the jargon that I can use to talk about it. So we've considered this is today to us the best trade-off between flexibility of what you can do and scale. And happy again to talk more about it. I know that you have other things in mind. I know that also Guy is here somewhere, Guy Cohen. So he's got Mimblewimble going, and it's launched on Jan 3rd. Also, so if you're looking for cryptocurrency with private asset transfer, that's an interesting technology. But for our needs and looking at what's available in terms of those trade-offs between privacy, flexibility of what you can do, and scale, this is what we picked. This is what our R&D team picked. Right. So we're good. Thanks again for coming. You have the last slide from the product talk. Invites you to go check out this product, check out the API, tell us what you think. This is the first product that we're putting out. So, yeah, well, merci. First product that we're putting out for you to actually be able to use and test. So again, thanks for coming. Thanks for Liad for organizing this event, and also for the RISE people to stay here on a Thursday. It's not usually there's no events on Thursday, but they did it especially for kids. Okay, thanks a lot.